Hello and a very good afternoon to everyone watching. Thank you so much for tuning into the third episode of our corporate tax series. For those of you who haven't watched the first and the second episode, I will link it for you in the description, wherein our in-house experts, Mr. Mansoor and Mr. Floyd, shared their knowledge and insights on the basics of the corporate tax. But today, in the third episode, we're diving into a whole different topic, which is transfer pricing. And for that, we have Miss.
Hi everyone, this is Linda here and I'm financial expert at Avyaho.
So today, Miss Linda is going to help us understand the basics and the implications of transfer pricing in the UAE. But for those of you who haven't watched the first and the second episode, she's also going to clarify the basics of the corporate tax. So over to you, Miss Linda.
Yes, so corporate tax is a direct tax which is levied on the taxable profits of the business and not on the turnover of the company. It is going to be effective from 1st June 2023.
And it's also at a flat 9% rate. So all of us have to remember that. Now we're going to dive into the questions, so stay tuned. So Linda, what are transfer pricing rules?
So transfer pricing rules are the rules to ensure that transactions between connected person and related parties are carried out on arm's length terms.
Okay.
So now let's understand what is arm's length terms. So the transaction that is happening between a related party and connected person should be carried out in such a way that it is happening between two independent parties.
Got it.
So let's understand this with the help of an example.
Please.
So I have a business of trading in watch. Okay, and we are related persons.
Okay.
So I am selling this watch to market at dirhams 500.
Okay.
And now when I am selling it to you, the watch should be priced at same price what I am offering it to the market. It should not be at a higher price or a lower price.
Got it.
Yes.
So no conflict.
No conflict of interest in the transaction.
Okay, so I have a follow-up question. So how are the two concepts interrelated of transfer pricing and corporate tax?
Yes. So corporate tax law specifies certain rules regarding transfer pricing.
Okay.
So it is specified in Article 34 to 36 in corporate tax law. So the requirement here is that when you're determining your tax liability, there is no manipulation of any transaction that is connected with your related party or your connected persons. To avoid any manipulation of determining your tax liability, these rules has to be complied in determining the taxable value.
Got it, got it. Okay, so what are related parties?
So related party, we can understand it in terms of an individual and also a company. So since we are talking about corporate tax related to companies, let's understand it and based on the perspective of a company.
Fair enough.
So for company, it refers to any company in which the individual or company is holding 50% or more common holding, shareholding in the company. So you have a 50% or more ownership in the other company. Such company will be your related party. So company A is holding 50% or more shareholding in company B. Then company A will be the related party of company B.
Understood. Very, very well understood. So who are connected persons?
So connected persons are the shareholders of the business, the directors of the business, owners of the business, and also their related parties. The above three, the shareholders, the directors and the owners, their related parties are called connected persons.
Oh, okay, okay. So will transfer pricing rules apply to both domestic and cross-border transactions?
Yes, definitely. So the transfer pricing rule is applicable to all business irrespective of the related party where they are located, whether it could be UAE mainland, UAE free zone, or it could be in any other foreign jurisdiction.
Oh, okay. Understood, understood. So now moving on. Okay, Linda, you very, very well explained what arm's length value is. But what are the transfer pricing methodologies that can be used to determine this?
Okay, there are a few methods that has been put out to determine the arm's length value. So there are basically 5 methods. So the first one is comparable uncontrolled price method, the CUP method. The second is resale price method, and the third is cost plus method. Fourth is transactional profit split method, and the fifth one is transactional net margin method. So when you choose the method, it has to be specific for each transaction. So there has to the method which you choose will be of key importance to determine your tax liability and arm's length value.
Understood. So what documentation that should be maintained in respect to the transfer pricing?
So business is required to maintain information related to transfer pricing transactions. So the transaction between related party and connected persons, every information related to that has to be maintained. So certain business is required to upload these information along with their corporate tax return. And in case of some business which claims itself to be a small business, did not comply with the rules of transfer pricing documentation.
Understood. So, do taxpayers need to consider whether intra-group loan arrangements are at arm's length?
So transfer pricing rules applies to all transactions between a related party and connected persons. And in case of any loan granted or obtained from related party or connected persons, you have to comply with the transfer pricing rules. Let's say in the market, the loan of 12 months tenure is being offered at 9%, and the loan which you are giving to your related party or connected person needs to be as per these market standards.
So the same price, like the same rate and the same tenure. Yes. Understood. So would transactions in a tax group need to comply with transfer pricing rules?
So transaction between members of a tax group are usually eliminated when you are preparing a consolidated financial statements. Okay. But in certain cases, if the tax member has to utilize the tax losses, they have to compute their standalone tax liability before exiting the group or before joining the group.
Understood. Actually, very, very well understood. So thank you so much, Linda, for your time. And thank you so much for your knowledge and insight on this topic. I'm pretty sure our audience and our viewers have a better understanding on transfer pricing. But just in case you all have any further questions, please feel free to reach out to us. All of our financial advisors here are waiting at your beck and call. And also, in case you don't have a good understanding of the basics of transfer pricing, please make sure to check out our first and second episode, which I will link in the description. I already mentioned this. So thank you for tuning in, and make sure to subscribe to our channel and press the bell icon to never miss an update. Thank you.
Thank you.